All right. Hey, everyone. Mark here, Mark P Markets. Thanks for joining me for another Bitcoin video analysis session. Okay, actually, I always say that just automatically. This is not a Bitcoin video analysis session. This is the monthly student meeting for the month of April, even though today is May 1st. Okay, I just couldn't find time during the month of April, so we have to conduct it today. Now, I am streaming this publicly. All right. This is an open house. And hey there. All right, cool. This is an open house. I normally stream these meetings privately for students and members. Okay. So I'll probably be doing more of these open house type meetings. But here's the thing. If you're not a member, you get to participate in it now and you get to be in this now. If you're a member, then you'll have access to the archive and then you can watch it at your convenience. Okay. So if you're not a member, you know, this first one I will probably leave up on the YouTube channel. That's why I'm streaming on YouTube. I'll leave it there so that people can see it. But after that, I'm going to just hide them and they'll only be available to members if they want to watch them in the archive, okay, at their convenience. Okay, cool. So again, thank you for joining me. What we're going to talk about today in today's meeting is we're going to go over the Trade Scanner, okay, the Trade Scanner Pro, but we're going to talk about position sizing in particular. Now, I'm going to spend an hour with this, and we're going to go over some things. Some of you may be like, oh, that's old, I don't need to know that. But this is more geared toward beginners because position sizing is something that I believe is often misunderstood and or just underappreciated. And it's extremely important because if you don't get that right, it doesn't matter what kind of strategy you use, you're setting yourself up for failure. Okay, so we're going to talk about effective position sizing and the correct mindset to apply that. Okay, because there are some psychological things going on here when it comes to position sizing, and we'll talk about that. All right, so with that being said, let's get started. Okay, hold on a second here. This is for educational purposes only. For investment advice, please consult a licensed investment advisor. All right, so again, I'm streaming on YouTube. Hello to my people. All right, cool. Good to see you guys. Thanks for stopping by. Feel free to ask questions as I go through this material. Now, before I get started with that, just want to mention, if you're not familiar with Trade Scanner Pro, let me just show you real quick. All right, you can go to this website here. In fact, I'm going to put the link right here. I'm going to type it into the channel. Okay, hold on a second while I put it in the channel. There's also a link is also in the description, okay, on the YouTube video. The description is there, so you can click there as well. But it's T. Okay, so this is the link, right? If you go to this link, it will take you to this page that you see here. I'm just going to make this bigger so you guys can see it. All right. Now, that takes you to the Market Signals Pro website, takes you to the Trade Scanner Pro page. On this page, you can read more about how it works exactly. You could read about me, and then you can register for a 14-day free trial, okay? If you haven't done this yet, I don't know what you're waiting for, all right? There's been a lot of good feedback on this thing. It really helps as far as removing the burden of analysis and giving you order suggestions so that you don't have to worry so much about calculating this and analyzing that. It really reduces the confusion and simplifies the decision-making process. So please give this a try. It's 30 days. I'm sorry. It's 14 days for free. If you cancel within the 14 days, which is very easy to do from your user dashboard, then you do not get billed. As you can see, my prices are not exactly ridiculous. All right. $22.50 a month if you pay the yearly, right? You're saving 25%. And the monthly is $30 a month. Okay. So even if you pay for 1 month, like if that's too much money, I don't know what to tell you. Okay. This tool is worth a lot more than $30 a month. I will just tell you that right now. And these prices are preliminary. At some point, we're going to raise them. I mean, Stian has been pushing out updates on this thing, and we're putting more value into this script. And we have a lot of other ideas and things in the pipeline. So again, take advantage of this. Okay. Simply go here. Okay. You can sign up. It takes you here. Make sure you put in your TradingView username. All right, you put that over here, because if you don't, then I can't send you an invite. I have to send the invites manually, just so you know. So please allow a few hours. If you sign up, it's not automatic. So just give me a few hours and I will send you the invite, and I will send you a message on TradingView letting you know that you're in. Okay, so that's how you get there and all that stuff. Okay, cool. So now we got that out of the way. Also, in the description, you will see 2 affiliate links, one for MEXC, one for Bybit. Okay, those are Stian's affiliate links. Please help the guy out. Sign up, open an account, place trades, and he gets a small cut. It helps him immensely support the community with all this great work. I mean, TradeScanner Pro is a result of his hard work. You know, we collaborated, we came together, and he was able to code my ideas, which is something I would not be able to do. So, you know, so please help the guy out. All right, cool. Hey, Van, good to see you. All right, no problem, no problem. All right, so again, let's get into this now. First thing, just before I get into the TradeScanner Pro and before I get into the position sizing, I just have to say something. I don't know how many of you guys read my article on Sunday or watched my stream on Monday, but I talked about this scenario, right? This over here, you could say, oh, no, you were wrong. You called it a long. There was a long signal at the time, and that's what this is on my chart. Let me make the chart bigger. Hold on. So that's what this is over here at the illustration, because I was anticipating we might get this scenario this week. But I also said if we took out the pin bar low, if you read the analysis, and we talked about this on Monday as well, then that's a stop out. That trade is no longer valid if you take out the pin bar low. The arrow is pointing to the pin bar that I'm talking about. All right. I mentioned that if 60K breaks, we're going to 50K, most likely. All right. Again, we don't know the future, but this opens the possibility of 50K, right? I also mentioned this on my stream on Monday. We talked about the monthly candle. We talked about the 1 month candle, right? You guys remember this? This is the monthly chart. We closed red. First time we've closed red in many months. I said, if we take out that low, that's a bearish sign. We have not seen this type of price action in a long time. So this opens up the possibilities for much lower prices, just so you know. Now, I'm pointing this out. Maybe you guys saw the stream. And I'm not sitting here trying to be all like, oh, I'm smarter, blah, blah, blah. I'm not doing that. But I do want to point out one thing. A month ago, or back here in this area, right? All these clowns on YouTube and everyone, all the fake gurus and all the experts and blah, blah, blah. What were they calling for? Anyone remember? Does anyone remember? Hey, we're going to be at 100K. Hey, you better get in now. You're going to miss the run to 1 million. It's going to be 1.5 million. Blah, blah, blah. Do you guys remember that nonsense? I do. Okay, and I'm the only one that said the party was over up here. I said, you could look at my TradingView article where I wrote it in bold, in capital letters, the party is over, okay, after wave 5. And I suspected that here. There was a possibility we could have gone to 83K, but there was nothing but trouble in that area. So that meant that all that nonsense about, you know, oh, this fund is buying that and institutional blah, 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 blah. They had done their buying and they were selling here. They're not going to tell you when they're selling. So anyway, I just wanted to point that out. Okay, whenever something pushes highs and looks like ridiculously good, that's usually when risk is the greatest. And I warned investors. I said, these are not good prices for investing. Now we're getting to investing prices. Okay, these prices are much more attractive, especially like the mid 50s to lower 50s. I mean, what's today's low? 56.5. Okay, now we're starting to get to more attractive prices. 53K, 50K, those are dollar cost average prices, okay? But again, you don't go heavy because if there's no sign of bounce right now, okay? We broke a major support. We have to close below it. It looks like we're going to, all right? And that opens up the possibility of lower prices. But I'm looking at, you know, lower 50s. We can't judge and say, well, based on this, we're going to 40K. We can't say that. There's no way to know, just letting you know. We need to see what the price action does and how it behaves at levels. Clearly, we have a level coming up right here. You could see this horizontal line on my chart. Those lines aren't randomly drawn. There's a reason why it's there. And that happens to be 56 even, okay? And we bounced off of 56.5 so far. So we have to see how price action develops in such an area. This may be a swing trade long opportunity as well, but right now at this moment, there's nothing but bearish momentum, okay? Just wanted to point that out so you guys are clear. Yeah, right, unboxing, you remember, 100K BTC. I guess we are going to go to 40K first before we go to 100K, right? Okay, anyway. So, yeah, I thought that was funny. All right, so let's get into the trade scanner now, shall we? I just had to rant about that real quick because whenever I see these situations, it's like, I hope my customers, I hope my followers are not surprised. I hope they're not, and they shouldn't be with all the stuff that I give them. I know some people can argue and say, but you told me to go long. That was a long signal, but signals fail, okay? And there's risk. You have to define the risk and decide if you want to take the risk. And that's what we're here to talk about today, about, you know, taking risk and signals and sizing and all that stuff. After the day is over, only you can decide how much risk you're going to take. And then you have to decide if are you willing to assume the risk or not. You have to answer that question. Only you can answer that. The chart can't answer that for you. The chart can tell you what the risk is, but you have to decide if you want to accept it or not. You don't have to, okay? You have to know what you want to do. A lot of beginners don't have the experience to do that. So they just take all kinds of trades because they're just trying to get rich tomorrow, you know, like those type. We all start out that way, but that you have to get over that, okay? That's the herd mentality. That's typical human behavior. And that does not help us in this game. We have to capitalize on those people, right? And that's what I teach. As traders, we're making money on the mistakes of others. That is what we're doing. Yes, I know it's sad, but that's the way it is. So yes, it's good that we have millions of ignorant people just reacting to nonsense on YouTube. Okay, that's cool. But people that follow me, I hope I can get you out of that phase. Okay, so let's move along to the trade scanner. Okay, any questions about this Bitcoin situation? Are any of you guys surprised? You guys shouldn't be. If you've been following me for a while, you shouldn't be surprised. Okay. Again, like I always remind people, I'm just going to see if there are any. If there are no questions, just please give me like a no in the chat so I know. I always tell people, you know, this is not a game about knowing the future. You know, this situation may have been sparked by the whole CZ getting sentenced. I assume it was sparked by that, right? And then we have, you know, the FOMC meeting today. Perhaps we got further bearish momentum as a result. I don't know. I'm just guessing. But a month or two ago, not one person, not one expert was saying, well, you know, on April 30th, CZ is going to get sentenced, and that's going to be a bearish thing for Bitcoin. This came out of nowhere. We knew he was going to be sentenced, right? That was public information. But you don't know how the market's going to react to it, right? And this comes out of nowhere. So that's what I mean. A month ago, 2 months ago, everyone was having a party. Everyone was going to be rich again. Everyone, oh, altcoin season is back. Oh, the top 10 altcoins to buy now before you miss out. Nonsense, right? Please, I hope you don't get sucked into that. I hope my followers don't get sucked into that nonsense because it's complete nonsense. All right, cool. Okay, cool. All right, Brian. All right, thanks, guys. Thanks. All right, okay, no more rant. I'm going to now change to trade scanner mode. All right, so let's take a look at the trade scanner. This is a NASDAQ. Look at this. What's going on here? Man, oh, this trade was just called. What time is it? This is a 15-minute time frame. A short, man. What a nasty move. Okay, that's a 15-minute. Anyway, so let's use Bitcoin. I'll use Bitcoin as an example. We can use Bitcoin because I'm sure a lot of you guys don't trade this thing here. So we're going to go to Bitcoin Perp. Okay, BTC USD Perp. Now, for those of you that are not familiar with the trade scanner here, I'll explain to you how it works here in a moment. Oh no, I'm on the wrong symbol here. Hold on a second. I want Bitcoin Perp. Okay, this is for perpetual futures. I'm pulling up the MEXC chart. Okay, now, real quick, again, as a refresher, the Trade Scanner Pro works. It's the formula of the Trade Scanner, except we converted it to a script that you can use on TradingView. Okay, so this is what it does. First, it identifies a trend. The trend could be bullish or bearish, okay? Then it looks for a pullback in the trend. In the case of a bullish trend, it looks for the pullback. This is the pullback, okay? Once it identifies the pullback, it then looks for changes in momentum in this area right here. Once the changes confirm that momentum is changing, right, and the market does that, it will call a signal, okay? So it doesn't call the signal at the exact bottom or best price. It waits for confirmation, and then it calls a signal. The signal places orders on your chart. The orders kind of look like this, these horizontal lines. These are order suggestions, okay? That's what it does. And you then have your risk is defined in this area, and your reward is defined in this area, okay? You can use this on any market, any time frame. The standard reward risk ratio on this thing is set to 1.5 to 1. You can see it right there. It says 1.5. You can change that, all right? But anyway, so first I just wanted to show you how the trade scanner works. Obviously, the opposite would be for the bear side, okay? Now, there are some really cool features that the script has that the Trade Scanner Classic does not have, okay? One of the cool features on this thing is something called Heads Up, okay? In fact, our recent upgrade, we just put in previous trades so you can see old signals, but Heads Up tells us when a signal is likely to show up soon, all right? So it paints the candles orange. You can change that color, but that means a signal is likely to follow very soon over the next few candles. That's why it's called Heads Up. That's really valuable, okay? In fact, I don't recommend taking trades on that, but when I'm very aggressive, I do, and let me tell you, it gives you some good prices, okay? It has a trailing stop feature, and then, of course, there's counter trend. What counter trend does, right? Let me put counter trend on here for a moment. You can see some old trades on the chart. Counter trend, what it does basically is when you have the trend on your chart, right? Let me draw that back here. When you have your trend on the chart, right, like this, you have your trend. Counter trend, right? You're looking for, this is a bullish trend, right? It's a bullish trend. Counter trend will ignore the trend and call these signals as well, right? Where it goes, that's called mean reversion, by the way. So it goes up to a point and it turns, right? Now, since those are counter trend, they're usually lower probability. But when you have a wild market like these old trades that you see on the chart here, these are counter trend. Why? Because the trend was bearish at the time. See the trend right there? It says bearish. That's how you know what the trend is on this time frame. This is the 15-minute. Look at this counter trend trade. Okay, what time was this? That was that was an hour before the FOMC meeting. Okay, the FOMC was at 2 p.m. This was at 1:15 Eastern time. It called a long, okay, on Bitcoin on the 15-minute. So we can take a look at that real quick. Now I can use the replay, right? And we can see what that trade actually played, how it played out. So that was the trade that was called at that time. You see this? That was a counter trend trade. Now, using counter trend is advanced, and that's not something I would recommend if you're a beginner. If you're a beginner, just use trend mode. As you get used to it and you paper trade and you get more comfortable, using counter trend will come, I think, naturally, because you'll see when you're at a certain level and you're anticipating a pullback, but the trend is bullish, you flip counter trend mode on, and then you get your signal. Okay. Anyway, but it's a lot of jumping back and forth, so you have to kind of have some experience for that, and that's why I do these sessions to help you learn that. Right. But anyway, so this was the trade at the time. Now let's just play a couple of bars forward. Let's see what's going on here. Does this one stop out? Oh, look at this. So this one, okay, so that was this trade over here. See that one? That one stopped out, obviously. This is a 15-minute chart. So these bars are taking 15 minutes. Another trade was called soon after it, the second trade. A lot of times when you get these situations on the trade scanner, right, you get a trade like this, right? You get a trade. Notice there was a warning before it, orange candles, right? You get a trade, right, like that. It stops out, and you get another trade soon after. That's a failed low. That's a very high probability signal usually, okay? So when you get that, now this one, obviously, look at these wild moves, okay? The trailing stop, as you can see, is now coming up. Again, these are 15-minute candles. So you're like waiting for this thing. This is like 45 minutes into the trade now, okay? Now, let's advance this a little bit more. And you see like price actions kind of fooling around. In these situations, you know, as a beginner, you can wait for the take profit. Hopefully it gets there. It may not get there. What I like to do in these situations is I like to take something off when it gets to here. Like I just like to take something off the table, especially when you're dealing with the NASDAQ, because that thing is wild, right? And then what I'll do is if there's any retest of this entry price, I'll get back in. But anyway, that's another story, right? I'm not here to talk about that. Like I'm not talking about averaging into positions. I'm talking about risk today. So the trade scanner, the great thing about it is when you have trailing stop mode on, your risk is always being reduced. This is the trailing stop. Now, understand something. The Trade Scanner Pro does not take trades for you. I had someone ask me, you know, what brokers is this integrated with? It's not integrated with any brokers. You have to have your broker and you have to place the orders, okay? So when something goes against you, for example, and it's time for you to get out, you have to manually exit here on this trailing stop. You have to press the market button or something, put a stop there. This is the stop. This is the risk right here, the full stop, okay? You have to respect these levels. If you don't, you can get caught in a very nasty position going against you. You have to respect these suggested orders. The stops are extremely important, right? That is how you protect yourself. Now, the point that I want to make, though, is that your risk is always being reduced, right? So this one, look, it actually went to the take profit, and it blew out the whole order here thing, right? The trailing stop should be following it. That Steen is still working on that trailing stop situation, okay? But the trailing stop should basically be following that thing. Let me take this off again, and let me rewind this so we can just go back, okay, and start back here and see that thing again, okay? So yeah, it takes it off. I guess it's when it's in this mode, for whatever reason, it takes it off. I don't know. He's got to work. He's working on that. But let me point this out here. Let's go back and let's just see. It just blows through, like the next candle blows through. Okay, so let's just leave it right there. Now, let me put my trailing stop. Let me turn it on. Okay. And the trailing stop appears here, right? So before the trailing stop appears, obviously, we can measure risk, right? What is the risk on this trade? You can see the stop order on the chart here, the red line, right? So between the red line and the blue line, that's your risk. The trade scanner defines the risk so that you don't have to. So if I ask you, what is the risk on this trade? You can tell me. You shouldn't sit there and say, well, I'm not sure. You can't not be sure. It's right in front of you. That's the risk. So how many points is this? All right, this is Bitcoin on a 15-minute. All right, so that's 57,164 was the entry. The stop on this thing, 56,375. Okay. That's almost 1,000 points, right? What is that, like 850 points approximately? I don't know exactly what it is. It doesn't matter. But it's you get the idea. You could get a calculator out, okay? And you could figure that out exactly. That's your initial risk when you enter the position. All right? The trailing stop, let me turn the trailing stop off for a moment. Okay? The trailing stop, when you start the position out, doesn't appear right away, right? Because the market needs to start going your way. So this is your initial risk. And it is very possible that after you take a position, the next candle can do this to you, especially on smaller time frames, right? And it can go to your stop. So when you have your stop, when you have your risk defined like this, the next question is what? What kind of size do you put on? Now, of course, we're looking at a winning trade here. So of course, everyone's going to say, oh, you put on the max position. But the thing is, a lot of times, right? Like for example, the trade before this one over here, that stopped out. So we don't know if the trade is going to work out or not. Okay, that's the nature of a random environment. People think that there's a way to forecast this game. There isn't. We're essentially playing a slot machine. Okay, you have to accept that idea. I tell people, I remind people that all the time. And I think back to when I started out in this game more than 25 years ago. If someone told me, bro, this game is random, I probably wouldn't have listened to either. I would have been like, no, it's not. People make money all the time. It can't be random. The market is not 100% random, but it's highly random. Okay. And it took me 15 years for that idea to sink in. So please embrace that idea. Now, maybe if someone I really respected at the time, like a major big name, market guy or a trader or someone, maybe if someone like that told me, maybe I would have been more open to the idea. But so as a beginner, it's hard to be open to that idea because everyone wants forecasting. Everyone seems to tell you that it's possible. Everyone seems to, this guy called this and that and this and that. It's random. If you go to a casino, do you expect to play the slot machine and come out like with job replacing income? Of course not. But that's a slot machine in a casino. Oh, I'm just there for entertainment. Right. This is the same thing. You have to equate the two. They're the same thing, but not exactly the same. Slot machines don't trend. Okay. Markets do. That's why markets are better. Right. The markets are not 100% random. Now, anyway, with that aside, when we have our risk defined in a trade, we need to understand how to size for this. Anyone have any ideas? Okay. Anyone want to chime in and tell me, how do I figure out my position size? So we have Bitcoin perpetual futures. You could use same thing for Bitcoin spot, right? If you're using the spot, you're going to actually calculate your actual amount of coin, right? Like a half a coin, a quarter of a coin, an eighth of a coin, something like that. With the futures, you have contracts. So it's going to be one contract, two contracts, but each contract is going to represent a certain amount of the underlying asset, right? It could be one coin. I don't know what it is for each broker. What I usually look at is just the tick size, right? The tick amount. And when I deal with that, I'm looking at the CME, the micro Bitcoin futures. Because since I'm located in the US, I cannot trade. I can't trade on MEXC. I can't trade their futures. I could trade Coinbase, but I like the CME setup. I like because I'm just much more comfortable with the platform, the all that kind of stuff. So I like the CME version. But you could use Coinbase if you're in the US. All right, anyone want to chime in and tell me, how do we figure out the position size for this? Anyone? You want to type in how you would calculate that? Now, this is sort of a trick question. Let's see. Depends on how much of a position you're risking. Okay, but Brian, how do we arrive at that? Brian says 1%. Okay, 1% of what? From account size. Van, you got it. This all starts with your account size. The whole thing begins there. People tend to forget that idea because, you watch a YouTube video, a guy shows you, oh, I turned $500 into $50,000 in 3 weeks. And you don't care about the account size. You just want to do what that guy is doing, right? But account size is the foundation of the whole thing. The smaller the account you have, the less flexibility you're going to have. You're not turning a $500 account into $50,000 anytime soon. I don't care what fake guru tells you it's possible. While anything is possible, the likelihood is extremely low, and that's even for someone with experience. And the reason for that is because of the risk and the leverage, right? The magnitude of movement, because the way these things move, you're leveraged on a small account like that, which means you're taking positions that are way too big, proportionally big for that type of account size. So, for example, if you have a $500 account, but you max out the leverage and you're carrying a $50,000 position, right? And each point that it goes against you, let's just say is $50 or something, okay? That thing moves 10 points against you, you wiped out your account in like a minute. So that's why it's so important. You have to start with the account size, right? So Brian says on 10K account, right? It's $100, correct? Okay. So I mean, we can just for people that are just trying to follow along. If you have, right, a $10,000 account is a decent starting size, right? $10,000 in your account. Okay, that's your capital. Okay, can I put that next to it? That's your money. That's how much money is in your account. Okay, so you determine in advance for each trade should be the same. Now, if you're going to be more aggressive, then you can adjust your risk percent. The standard risk percent is 2%. Okay, 2% risk. That's standard across the industry. Typically, 2% of your account per trade. So if you have 2 trades on, each one is 2% risk, which means you're risking 4% of your account in total. Okay, on $10,000, right? That's $200 you're risking. Brian says he's only risking 1%. Okay, that's $100. Okay, so now you know, right? You've answered one piece of the puzzle here. You say, this is my risk. But in this, if I lose and the market pulls back on me and I have to take this stop out over here, I only want to lose $200, right? Now, we talked about that this size of this block over here, in fact, I can measure it. Let's see. How big is this? It's like 785 points, okay? 785 points wide. That's how large the risk is on this. If I had one coin, if I bought one coin, right, how much would I lose if this thing goes here? If I bought one Bitcoin and this thing goes 785 points against me and I have to blow out of this thing, or I put my stop order there and it stops out. Anyone want to tell me real quick, how much money do I lose? Now, I don't expect you guys to be able to figure this out like in an instant, you know, but it's nice if you have a calculator up. If you're new, if you're more experienced, you probably know the answer right away. Okay. I'm just testing you guys. I know this may be beginner for some people, but you guys should be very comfortable with this. So how much do I lose? I bought one Bitcoin, you know, right here on my $10,000 account. I'm only willing to risk $200. Van says, I don't know. So if when you buy one Bitcoin, right, each point is essentially $1. I guess it depends on the size of the contract, but I believe for these futures contracts, it's $1 per point, which means if it goes 785 points against me, I lose $785. Okay. So if I'm losing $785, am I over the minus $200? I'm way over. I'm like almost 4 times over. Okay. So that's unacceptable. I cannot afford to trade one Bitcoin if I'm only willing to risk 2% on my 10K account. Because if I lose that money, I'm losing like 6% or 6.5% or something like that. And you may say, well, that's not that bad. Well, that adds up. Okay. And you do that here and then you do that somewhere else. And next thing you know, you're minus like 20% in one day. That's how you wipe out accounts, right? That's why it's so important that you keep such tight control on this risk and knowing what you want to risk. So one coin in this case would be too large to take on this trade. And you say, but the trade was a winner. Who cares? But the trade could have been a losing trade. This trade was a losing trade over here. That stopped out. Okay. So that is important. Like you say, well, that's too big, right? So you would trade 0.25, I think, at that price. You only lose 200. Yes, correct, Unboxing Channel. So you're going to take a smaller position, right? You're going to take a quarter of a Bitcoin. And when if you lose this amount, you lose $200. And you say, okay, all right, cool. We have that under control. If you win, this is 1.5 to 1 reward risk, right? So you're making like $300 if you win. That's not bad, especially if you're doing that like in a matter of a couple of hours, right? Or whatever, however long. This is like what, an hour this trade took or something like that. So you're looking at $300. Now, some people must say, but $300, that's not enough money. Then you need a bigger account, right? So that's the way you have to look at it. People that have the biggest problem with this are people that have like $1,000 accounts or $500 accounts because they want to double and triple their account, but they don't realize the magnitude of risk they're taking. 2% on a $1,000 account is $20, right? So you're risking $20 to make $30. You're like, what do I do with $30 profit? Can't even buy a sandwich with inflation today. Can't even buy a ham sandwich with that. Okay, can't even buy a turkey sandwich with that. So when you're working with a small account, you cannot have that mentality. You can work with a small account, but you have to work within the proportions of that account. So in this case, you'd have to use nano lots, right? You'd have to have a Forex account with someone like 8cap, and you could trade nano lots of Bitcoin, which is like 1/10 the size of a mini lot. If you're confused about those position sizes, there's plenty of, if you just Google it, there's tons of information that explain what a nano lot is, what a mini lot is, what a standard lot is, right? You should know what those position sizes are, especially if you're working with the CFDs in the Forex space. If you're working with the spot Bitcoin, stuff like that, then it would be like 0.25 of Bitcoin or 0.125 of Bitcoin. It's going to be something like that. Okay. Does that make sense? In fact, I'm going to show you real quick. For those of you that may not be familiar, there are, if you Google it, there are tons of position position sizing calculators. Okay, I'm going to pull one up. Okay, so that you guys can see it. I don't particularly recommend a specific one. But there's so many of them out there. Here, I'm going to pull up this one. All right, check this out. Okay, it's typing in the URL. I think it's position size. All right, this one's pretty cool. Let me see if this is the right URL. Okay, now hold on. I'm going to share this on the screen here. Just give me a moment. I'll get this up on the screen so you can see it. Okay, so check this out. You guys see that? Yeah, let me take this away. So this here, can I move this around? Yeah, hold on a second. Let me make this a little more, so I could move it around. There we go. Hold on, I'll put it back up here. Hold on a second. So here's a position sizing calculator. This is from FX Verify. But again, you could just Google this and there's all kinds, okay, that are very similar to this. This is like a common widget, okay? And you can use something like this. As you could see the inputs, right? You pick your instrument, okay? You could type, you pick your instrument here, Bitcoin, BTC USD, right? Against Bitcoin against the dollar, right? You put the open price. So here, we can even use this example here, okay? So this was 57,164, right? So 57,164. I can't even type right, okay? There we go. And then the stop loss price, okay, which is 56,375. Okay. So again, I got all this from the trade scanner. I don't have to calculate any of this on my own. It's all there. My account balance, right? So let's just say I have a smaller account. I have a $5,000 account and I'm risking 2%. Okay. 2%. What should my position size be? Calculator. What should it be? 0.127. See that? And I'm risking $100. See that? See that over here? See that? So again, if you're not like big into like I don't really feel like calculating stuff, you can just pull up a calculator tool like this, and you can use this for like anything, Forex, indices. I don't think they have specific stocks, but you can figure that out. Okay. So again, this is from FX Verify. That's where this is. If you Google that, FX Verify, and then you type in position sizing calculator, you'll get this. But again, they're everywhere. So I thought this was a cool tool for beginners to use because it tells you right there. Here's your position size. That's it. All right. So you guys get that? So again, if these are futures contracts, this is not going to account for futures contracts. You're going to have to be a little bit more advanced for that, or you just understand what you're dealing with the futures contract, what the size of that contract is. But or if it's a CFD, like a nano lot, you can just Google that. If you're unsure of something, Google it and you'll get the information that you need. Okay, so I hope this helps you here. So now, so you guys pretty much understand now that the trade scanner gives you the risk. So it removes that uncertainty. There's no more guessing. What is my risk? If I ask you, what is your risk? And you're using the trade scanner, you should be able to tell me instantly what it is if there's a trade, available. Okay. Now, this is at 1.5 to 1 reward risk. Like I said before, you can change this number, right? This is 1.5 to 1. You can change it. Let's say you want to trade 1 to 1 because you're just less expectant of the market. Now you see the order vanished, right? Because 1 to 1 was much lower. If I go back and we look at this trade with a 1 to 1 reward risk, when it pops out with 1 to 1, look where the take profit is, right? It's lower. Notice the take profit. Actually, no, that's the first trade. This is the first trade. Hold on. Let's go back. Let's go to the second trade. This is the one that stopped out. Okay, see that? This is the second trade. This is the one that had the profit. Okay, so this is 1 to 1 reward risk. See that? So the risk here, which was 780 whatever points, 780 points, whatever, is the same here. Notice it's the same size rectangle. That's 1 to 1. You say, well, why would I do that? I want more than 1 to 1. What if you're in a very aggressive position and you're expecting less? You can switch your reward risk to 1 to 1. If you notice here, it says 1 instead of 1.5. All right. The standard setting is 1.5. You can also make it higher. You could make it 2. You could make it 3. When would you do that? Let's say 60K held on Bitcoin and we got buy signals there. If 60K held again, a push to 65K or 64K would not be unreasonable. So at that point, maybe you'd want to raise your reward risk to like 2 to 1 or 3 to 1 because you're expecting more from that level. That's a judgment call you have to make. And that comes with experience, right? When you get a little more experience and you understand context, then you say, oh, okay, there's more potential at this level. So I'm gonna put a take profit at 2 to 1. Now Van over here, Van is very clever. And Van figured out that you can put multiple instances of the Trade Scanner Pro on your chart if you have like a pro version of TradingView, because you can't do too many tools if you have the free version. There are some limitations, but you could put multiple instances, okay? And you can put one instance could be 1 to 1. The other instance could be 2 to 1. And one other instance could be 3 to 1. And it will put them on your chart. So you'll have like 1 to 1, you'll have like 2 to 1 over here, and then you'll have like 3 to 1, and it'll put them all on your chart, which is really cool. So you see, your reward risk, and you have reference points for profit potential. Okay, that was something that he figured out, and that was not something I was even thinking of for something like this. So it's cool when people take it into their own hands and find new things. Okay, so any questions so far? Any questions about that? It's funny. On Mondays when I stream, I get like 150 people. I'm streaming today on YouTube and I see like 6 people. Oh no, maybe that's because I'm on these are the people in my, okay, I'm running a webinar. I'm not on YouTube. I can't see YouTube. Okay. I could see people typing to me from YouTube, but I can't see how many people are watching me there. I'm like, man, there's only 6 people watching me. Where is everyone today? Must be like the holiday or something. Today's May 1st. It's not May 31st. What's wrong with people? What's wrong with you guys? I'm joking. All right. Any questions, you guys? Yeah, YouTube people, you know what? Yeah, I could see what you're typing. So if you guys have questions, I could see that as well. But YouTube people tend to be very shy. They don't type to me much. Okay. So, all right. How are we doing with time? All right. We got some time here. So basically, I wanted you to understand this position sizing rationale. I know for some people like, all right, this is so boring, but it's something that look, if it's boring, that means it's good. Remember that. When it's exciting, that means there's something wrong. Okay. It's usually you're gambling or something. If you're excited about something in this situation in the markets, it means you're probably taking risk that's too high. Okay. I've been in this game a long time. Trust me. I know. All right, so this basic sizing lesson is something that you should practice all the time. You should be very aware of it. Make sure that you do that, because if you don't respect the proportion of the money in your account, your likelihood of wiping it out is very high. Okay. And the industry will love you for donating that money to them, because usually it's these dealers, these brokers, these exchanges. That's who's on the other side of your trades usually. Okay. All right. So let's see if we could find a trade. And because I'm dealing with futures contracts, I mean, maybe what I'll do is I'll go to the spot, right? Let's put this back to 1.5. I'll go to the spot market so we could figure out appropriate sizing. Okay, we'll put it into practice. But let's see if we could find a trade. All right, so I'm not going to do this 15-minute trade. We're going to go to BTC USD. All right, is this going to pull up the Bitstamp chart? Probably. With all the stuff on it. Yeah, this is my stuff. Well, that's stuff on. Okay, but we're going to look at a 1-minute chart. Okay, let's go to a 1 minute. And let's see. I am right now. You could see what modes this thing is in by looking up here, in case you forget. Okay, so I am still in counter trend mode. You could see the warnings on these low points, right? You see the warnings? You can see the warnings, right? The orange candles. Those are heads up that signals are likely to follow. So you could see here there was a signal here, right? Look at that, right before the warning. There was a signal here, but no signal here. I bet you on a 30-second there's one. Now, hey, Pariah, how are you? Pariah, I meant to answer. I saw your message. I forgot. I hadn't had a chance to answer it, but thank you. Thank you. I got it. I appreciate your support. You had another week to go, and you confirmed it early. So thank you for that. I will respond to your message though. Thanks for joining. Okay, so what we're going to do right now is we're going to see if we could find a trade. I'm probably going to have to go to a 30-second. Now, the reason why I do this, I go to a 1 minute. See, look, I told you, there's a trade on the 30-second. This is a 30-second chart. I don't recommend these time frames for beginners. All right, now let's see what the reward risk is. Let's see what the risk is in terms of money, or in terms of account. So let's assume, I'm not going to assume a $10,000 account. Let's assume a $5,000 account, right? Something a little smaller. And let's figure out, let's measure this risk over here. What is this risk? How many points is this? It's 140, it's 141 points. Well, this thing's about to go to the take profit. So I might as well find another trade. See, now in a situation like this, right? The trend is bearish. See this up here? The trend is bearish and it called a long. Okay. Now, if I want to look for a short, I turn counter trend off. That trade goes away. Okay. Now notice there was a short called over here. See that? So now I'm in trend mode because the trend is bearish. And now this thing is looking for trend trades on the side of the trend. Trend is defined by the time frame that you're on. So on this time frame, the 30-second, the trend is bearish. That may not be the same for like a 2 minute or a 5 minute chart. The trend may be bullish, right? Or whatever. Now, so what I'm looking for is a trade. I want to see the heads up first. Okay. I don't have any heads up yet. Heads up are these orange candles. The orange candles tell me a trade is likely to show up. A signal is likely to show up very soon. On a 30-second chart, that means really soon. All right. I don't have anything yet. So I'm waiting. Now, while I'm waiting, right, let me pull my calculator out. Where's my calculator? Let me find my calculator over here. There it is. Okay, so I got my calculator. Again, if you're just joining, this is from fxverify.com. It's just a calculator I found. There are many calculators on just Google, position sizing calculator, Bitcoin, and you will find tons of them. All right, you find one that you like. A lot of them just look like this. I thought this was a nice, simple presentation. Okay, so we're watching Bitcoin. And when I get a trade, I'm going to calculate my position size based on a $5,000 account. So I'll just put this aside for now until we have the trade. Okay. Unboxing has a question. Do you set up the trade scanner for the time interval of your choice? Can you have simultaneous? Yes, that's a good question. So let me put this question so people can see it. So the unboxing channel asks this question here. All right. Yeah, you decide the time frame. Okay. Now I suggest you start out with one time frame in the beginning, but that's the great thing about TradeScanner Pro. You choose the time frame. It could be a 30-second, it could be a 1 minute, it could be a 30-minute, it could be a daily, it could be a weekly. Okay. Of course, the risk on the daily chart is going to be very high because the stop is going to be very wide. All right. But you use it on any time frame you want. And you can run, if you're running multiple charts, obviously you can run multiple time frames. And we're going to actually update this tool soon where you can track multiple time frames. Okay, I got some warning there. You see that? We're going to make it so that you can track like 10 symbols and you choose your custom time frames. Like, okay, I want a 5-minute, I want a 30-minute, I want an hourly, I want a 4-hour, right? And then it'll tell you when a signal pops up on one of those time frames on your particular list of instruments. Like, maybe you have Bitcoin, Ethereum, Microsoft, pound dollar, and whatever else. And then when a signal pops up, you can jump to your chart, take the trade, or set a notification for that. So yeah, but right now you could jump to any time frame. But like I said in the beginning, I recommend just stick to one if you're a beginner, because otherwise it can be very confusing because there could be counter trend trades. All right, I'm going to take this, right? Because I've been looking for the short. Let me put my trade thing up here. But I have to calculate my position size. Oh, I can't do this when I'm doing it. Like, okay, I'm trying to answer a question. I'm trying to do too many things at the same time. Hold on. So I'm going to take your question off. I'll go back to that question. I want to get this. I want to see if we can calculate the. There's the signal. Okay, I want to see if we could. So I want to kind of give you an idea of what this will be like. Okay. So we're looking at. Okay, hold on. Let me measure this. How much is this? 112 points. Okay. So you don't have to measure that. And by the time I get this measured, the trade's going to be over. So first I have to put my open price. Okay. 57,180. Obviously, you're not going to want to do this with small time frames. Like a 15-minute, you have a lot of time to calculate this stuff. Not on a 30-second. 57,299. Okay, on my $5,000 account, I'm risking 2%. Calculate. So 0.877 Bitcoin, and I'm risking $100. Okay. So on here, can I do that? 0.87. I don't know if it'll let me do that on here. 0.877 units. I think it will. Right? So I can actually set up all those orders right on this form over here. Right? Look, my stop loss. I can put those numbers in. Okay, 52.99. Right? 57.299. Okay. And my take profit price is 57.013. 57.013. Okay, so it looks like my risk, I guess it's calculated because it's not calculating from exactly the open, right? So I'm actually looking to make a little more. So I'm shorting this, and all those orders went out, right? So let's see how that plays out. But that's how you would do something like that. But again, this is a 30-second chart. I would recommend using a calculator like that. Like you should be able to do it in your head, basically, or you should know in advance. But you want to do this like on a 15-minute or a 5-minute where you have plenty of time to calculate. Here, you don't have time. This is 30 seconds. This can just change so fast. Okay? So if I get stopped out, I should lose $100. Okay, almost there. Let's see. Let's see if the calculation is correct. Okay, now this is 30 seconds. I'm with the trend and it's not working. Okay, and this is going to happen, but let's see what happens. All right, so far it's hesitating right here. Now, in reality, what I would do in a situation like this, if I got a red candle close after this, I would actually short more. And I'm getting some warning. Why would I short more? Okay. And again, you need a bigger account to do stuff like that. See, look, there it is. Because the risk, if I short more here and it works my way, if I short more, my risk is the lowest. Because look, if it stops out right now, I barely lose anything. I haven't shorted more, but if my risk stops, if my thing stops out, I hardly lose anything on that new amount that I shorted. Makes sense? But if it doesn't stop out, now I have a really good price and I have a larger position. And if it reaches here, or even if it gets back to here, I am now profitable instead of break even. See how that works? Again, that's really advanced. Okay, so back to that question. There we go. Look, it's going back my way. I'm not going to add. We'll just leave this thing alone. Let's see how it plays out. So unboxing channel. So yeah, to answer that question, just to be clear, yeah, you can put this on any time frame, any market. Oh, look, nice. See, putting on more would have been nice there. I'd be up more. I'd be up more than $15. Okay. So anyway, is my trailing stop on? Let's see. No, my trailing stop is off. If I turn it on, it may make the trade vanish. Let's see. No. Okay. The trailing stop isn't active yet. Like it hasn't started moving yet. So I just turned it on. Okay. In the middle of the trade. Okay. Following me so far? So again, I hope I answered your question, unboxing channel. Like, yeah, that's one of the great things about this. You could do this on any time frame. Just understand what you're dealing with as far as time frames. You don't really have to bang your head against the wall trying to figure things out with this. That's the whole idea. The purpose is really to simplify the decision-making process. You don't have to sit there and like, where do I put my stop? It's all laid out for you. I just placed all the orders in the order form you just saw there, right? Which came from the suggested orders here. Okay. So I suggest try the free trial out. Try it for 14 days. Okay. Try it on paper. Take small positions on paper. See how it goes. Follow the orders. Okay. As over time, as you watch me do this more, you'll learn how to navigate around the orders better. But in the beginning, the idea is to simplify, right? And just follow the orders. This takes all of that uncertainty away. My trailing stop is now present. You can see that. My risk is reduced barely. But let's see how this goes. Again, this is 30 minutes. It's a 30-second chart. Okay, so things happen real fast on this. And things change real fast. Okay. Okay, cool. So unboxing, I hope to see you as a free trial guy. I mean, 14 days for free. You won't get billed if you cancel before then. I don't know why you would cancel. I mean, this tool is worth the $30. Let's just put it that way. Okay, cool. Now, even if I understand some people, they don't have time to trade. You know, they have a job, this and that, whatever. I understand. And that's why we have the notification thing in here. Now, Stian is working. He's gonna push an update soon. We got some feedback that the notifications don't come out exactly at the time that the trade signal comes out. That's not good. So he's working on that. So the next update should have those corrections. You know, we've been. I mean, this is like what you're seeing here is the third update he's pushed, like in 2 weeks. So there's still updates coming, and when he gives me the update, then I could push it. So just keep that in mind. Okay, Brian, I think the real question is how often do you have to filter out the signal? What do you mean? How often do you have to filter out the signal? What do you mean filter? There really is no filter. You just decide, what side you want to work on. Like right now, I'm in trend mode right now. The false signals, there's no way to filter them out. Like this trade stopped out over here, they're going to stop out. You have to treat this like you're playing a slot machine. That's the best way to think of it. You don't know which trade is going to work. Okay. See, this got stopped out. So I'm going to get out of this now. Okay. I'm going to buy back I'm losing $56. I'm buying this back. Let me out. Okay. I'm out. So I got out even before it went to my stop because it went to the trailing stop. So to answer your question about the false signals, again, we don't know which one is going to work and which one is not. What makes money in this game, okay, are the runners. See how this was a signal here? That's an old signal, right? That one worked out. Look where it went. This was a signal, went nowhere. Look, this one was a signal too. That also stopped out. We don't know which one is going to work, okay? But when you catch one that works, you make a lot more. Look at this one. You make a lot more when you win, right? If you carry all of this, right, and you carry a good portion of this, you make a lot more when you win than when you lose, right? That's the whole idea. When I put counter trend back on, look at this trade, right? If you flipped over to counter trend, look at this trade. I mean, you're not losing this amount of money, okay? You're losing a fraction of that. So as long as you win in the amount, if you make $200 but you lose $100, you come out ahead over time. That's the whole point, okay? And no one tells you that, or they do. They say cut your losers, let your winners run, cut your losses short. They always say that, but that's easier said than done. This tool helps you actually do that. One should have good of when to take the trade or not. Well, okay, so that's what you're describing there is context. You should know context. That requires some training, okay? But the idea behind this tool is that you don't have to be an expert at context. You can actually get away with what I'm describing, just following the orders and capturing a winner. When you ride a winner, that's what's going to put you ahead, okay? But context does help, especially with these counter trend trades. So context is all about looking at larger time frames. Like I'm on a 30-second chart here, okay? But you would start to get context for intraday. You would like get on a 30-minute chart, and you'd start looking at support and resistance levels, and you look at trend, okay? I mean, look at this 30-minute signal over here. Unbelievable. But you would start identifying levels. Look, there was a level here, okay? So this is context. This would tell you that short signals up here there's probably a good chance that if you get a signal here, that it's worth trying to let it run. That's context. That's an old support, new resistance, okay? But again, I have a training program for that. I don't have the link here because I'm looking to update the training program. So I don't want like a lot of people on it, but I have a training program that explains all those things, okay? Context. That's basic technical analysis. You don't have to have 10 years of experience to know that stuff. Support and resistance levels and trend primarily. With those two elements, with a tool like this, I think you can, that would really reduce a lot of the uncertainty and build a lot of confidence. Okay, you guys. Fourth wave. Okay, but I wouldn't use wave counts with this. I wouldn't use wave counts. You can, but wave counts could be very confusing, right? Because then, when a wave count is wrong, you have to relabel everything. You're better off less is more in this game. You want to simplify. You're better off using trend and levels than you are using wave counts. I like using wave counts for very broad analysis, big picture, like Bitcoin on the daily chart, right? I have 5 waves on there, right? I like to use it for that. I don't like to use it for the trade scanner. Trend and levels are much better. So what you're saying is that it doesn't require a particular system. No, this is the system. The trade scanner is the system. These signals are not randomly generated. There is a reason why they're coming out, okay? And they're based on momentum. So this is the system. It gives you the signal. But to refine it further, you can just look at levels and trend, right? So like, for example, this trend is bearish. Clearly, this trend is bearish. There's nothing but lower highs, okay, and lower lows. So when you have break of support, those levels, break of support, usually old supports become new resistance levels, right? So then when you retest a level like this, that can be meaningful. That's a place to look for signals. You don't just step in front of it, but when the trade scanner happens to give you a signal in a predetermined area like that, that is a higher probability signal, or has a higher probability likelihood of following through. And then in this case would be short, okay? And that's where you could put a larger reward risk, okay? Or you can be more expectant of it and try to let the runner run, right? The whole point of having the trailing stop is to capture a runner, right? I've seen using the trailing stop, I've seen trades go 8-to-1 reward risk, 8-to-1. That's a lot, okay? So that's the whole idea. No. No RSI. You have to get out of that mainstream stuff. No. I mean, you want to use it, but again, see, whenever you mention when someone mentions the RSI, oh man, you've been consuming too much internet. The RSI has its place, but if you notice, if you Google like RSI, it's like, oh, most popular, blah, blah, blah. Everyone uses it. That's why no one makes money. It gives you no advantage. Okay. Again, to use the RSI, you have to really understand what it does to have its place. You don't need that. Okay. Again, levels and trend. That's all you need. Okay. And candlesticks help too. Candlestick patterns. Okay. So that's what this does. I don't use it like people do. Okay. But still, I mean, if you have your own unique use for it, okay, cool. But the thing is, you don't need it. Okay. Well, you could use it that way, right? There's other things you could use, other oscillators you could do the same thing with, right? But again, if you want to use that in conjunction, you can, but you don't need it. This system that you have, the TradeScanner Pro, is a system on its own. Okay. It's not, like I said, it's not flipping a coin to call a trade. There's a reason why the signal comes out, but it's expecting momentum though. So one thing that can help is volume, right? Like a low volume environment is not likely to work very well. This won't work very well in a low volume environment because you need volume to get momentum, right? So for example, holidays, right? In the middle of a holiday, when volume is very low, you'll see like the TradeScanner Classic calls bad trades all over the place because there's no momentum, right? We need volume. We need momentum. Well, I can't tell you exactly how it sees momentum. That's proprietary. That's why I have people pay for it. Okay. I'm not giving away the formula. So that's, but volume is a key component. Okay. I'm going to turn this off. Volume is an important piece of the puzzle. Basically knowing your market, knowing your environment, that's important for this. Because again, it needs momentum. So if you're in a high volume time, like for example, the US market open, right? The market open, there's usually a lot of volume. There's usually a lot of momentum. There's certain times of the day where volume is greater than other times of the day. Like lunchtime, volume is usually smaller. Okay. After the market closed, like now, going into like, midnight, Asian open, volume is usually smaller. So not a good time to really be using this thing. But at 3 a.m. Eastern time, right, the London Open, there's a surge in volume. So that's a good time to be using, especially in Forex. Okay. Okay, cool. So any other questions? Good questions. I got to wrap this up here in like a minute. Any other questions? So this was a student meeting. All right. Again, I don't do these publicly like this very often. These are usually for students. The replay, this one, I'll leave it on YouTube, but other ones, they'll only be available to members in the meeting archive. Okay. I'll put this one in there as well, but other meetings, right, that I do publicly like this, they'll only be available to members if you want to watch the replay on your own. I'd be happy to back test. Okay. Actually, Stian built a back testing tool, which I don't have it yet, but we actually have a back testing version of this where you can back test your instruments. But so if you want to try a free trial for 14 days, just go to the link that I put here. I'll just put it back here up here real quick. Here's the link. Where's my link? You can just go back. This is the link right here. It takes you to this page, marketsignalspro.com. It takes you to this page, right? You can sign up for the free trial right here, 14 days. You can cancel anytime before that. You will not be billed. And if you don't cancel, you get billed, and it's, and then you go from there. These prices are preliminary. They're introductory prices. We are going to raise these prices at some point. So by getting them now, locking them in, you're getting a low price. Okay. All right, cool, you guys. So any other questions? Let me just see the chat here. Mad love. Okay. I appreciate that. Cool. So yeah, at some point we'll have the back testing tool available where people can use it, but I don't, he's still working on it, but he showed it to me. And he put some samples of it in the Discord community. There's a link to that here in the description as well. Check out the Discord community. There's a community chat there. It's free. And he put a picture of it. All right. So I thought that was really cool. Anyway, you could check that out there. All right, guys. Any other questions before I wrap this up? All right, cool. I hope you got some value out of this lesson. If you have any other questions, you can send me messages on TradingView or in Discord or email. Don't send me comments on YouTube because I have a hard time answering those. All right. So you're better off in those other places. All right, everyone. So again, enjoy the rest of your day, the rest of your evening, wherever you are in the world. And thank you very much for watching.